and now we're looking for a breakout of this new high again. You see this nice green candle that pushes above it and closes above it around 8 o'clock on August 5th, and let's take a look when we would have peaked in this trade sometime at the end of August 6th. If you're coming from the previous part of this Technical Analysis 101 series, you just finished learning how to read candlesticks and understanding some candlestick patterns. Now, we need to understand the scope of that candlestick. When you get a bullish or bearish pattern, how do you know how long until that pattern plays out? And what significance does the pattern actually have? This video is going to be a bit shorter, but don't mistake that for how important it actually is. We're going to be going over time frames, which are one of the most important aspects of trading. Real quick before we get started, I just wanted to thank you all so much for your support in getting me to over 1,000 subscribers on YouTube. And if you're watching this and not subscribed, please hit that subscribe button if you'd like to see more content like this in the future. So now let's get into it. So on TradingView, you're going to choose the time frame you want in the top left corner up here. It might be slightly different for you based on what you're using to do your charting. However, all of them will have these different time frames you can choose between. The ones you're seeing by default for me are my favorite time frames. The one I've highlighted by clicking this down arrow up here and just starring them off in here. Then they always show up for me, and they're the ones I use most frequently. The 5 minute, 15 minute, 30 minute, 1 hour, 4 hour, and 1 day. So what do these time frames actually represent and what do they mean? To start off, I'm going to switch this over to the daily time frame. I'm going to go ahead and zoom in. And let's just take a look at those candles that we were looking at in the previous part of this tutorial series. When you have the D selected up here, or the daily chart, it means that every single one of these candles represents 1 day of price action. So if I just highlight over a couple, you can see at the bottom here that this one's August 19th, 2020, the next one's August 20th, 2020, etc. Each candle here is 1 day, and the more we zoom out, the more time we're actually going to see on this chart. So on a daily time frame, all the way zoomed out, we're actually seeing more than 3 years of data. And it would be even more if we could zoom out further, but this is just the start of the Bitcoin price on Binance. And on a similar note, if we go ahead and switch it over to the 1H or 1 hour time frame, each of these candles now represents 1 hour. So again, at the bottom, this is August 29th, 13 o'clock, which is the candle that starts at 13 o'clock or 1 p.m. and goes until 14 o'clock or 2 p.m. And just a quick tip, on TradingView you can switch between these time frames really easily. All you have to do is type in the number you want. For example, let's say we want a 3-hour chart. I'll just type 3H, and you can see it tells you in this box 3 hours down here in small gray text. And you can hit enter, and now we're on a 3-hour chart. Or if you want to go to a 45 minute, just type 45, enter. The other cool thing about TradingView with these time zones is that you can see exactly how long until the next candle closes. So you can see on the right here, it says 39:22 and counting downwards. That means it's 39 minutes and 20-ish seconds until this current candle will close, and we'll start to work on the next one. In other words, since we're on the 45-minute time frame, we're about 6 minutes into this current candle. So just to help drill the concept of these time frames and how they impact each other and the scope of them, I'm going to zoom into a 5-minute chart here. So let's take a look at a couple candles on the 5-minute time frame and see how they actually play with each other and how they scale up to bigger time frames. I'm just going to look at this huge green candle on the 13:15 start right here, the next one that starts at 13:20, and the next one that starts at 13:25 closes at 13:30. So we're on the 5-minute chart and we're looking at 3 candles here, which would represent 15 total minutes. You can see what this looks like spread across 3 different candles. So now let's switch this over to a 15-minute time frame and look what these 3 candles look like over there, starting from 13:15 again. So this is our start of 13:15, and since we're on a 15-minute time frame now, this also closes at 13:30. So you can see this one green candle actually represents those 3 previous green candles we had. It's just one really large green candle with a couple wicks on the bottom and on the top. And again, just going back to compare that, look at what it looks like on the 5-minute chart. We have this huge green candle that has a larger wick, but then it combines with this one right here and this one right here to form one candle on the 15-minute time frame. Now once you look at these enough and kind of understand how they play together, you'll be able to combine these pieces together on your own. But just to draw out an example explicitly here, we know this candle opened down here, so we'll start our rectangle there. And for the 15-minute time frame, we need to look where this last candle closed, which is all the way up here. So that's where the top of our box will be. And now we need to include any lows and highs as our wicks. So this would be the body of our candle on the 15-minute chart across these three, with it down here as the open and up here as the close. Now we need to include in those little wicks that we have both on the top and the bottom. So we'll just start down here and draw this up, and then we'll go up here and draw this little wick that we have. So this should be the candle that we see on the 15-minute chart, and just scrolling back to it one last time here, you can see that our drawing actually overlaps this candle perfectly. I'll zoom in on it just so you can see what I mean, and you can see that green line we drew for that box hovers right through this entire candle, and those red lines are covering the wicks perfectly. So last up here, we need to understand the importance of time frames. Why do we have all these different time frames, and which one should you really use? Now, instead of just preaching this to you and telling you the exact answer, I'm going to show you on a chart what each time frame looks like relative to each other and let you decide based on what you're trading. But let's get into it. Right now I have this open on a 5-minute chart, and typically when you're trading, you want to trade with the trend. So if the trend is upwards, you should be looking for a long trade, and if the trend is downwards, you should be looking for a short trade. Just quickly looking at this, you can see that the price is definitely moving up over time. We just keep going higher and higher and higher and higher, besides this one little pullback here, and even after this pullback, we're again just moving higher and higher and higher. The trend is clearly upwards here, so you might be looking for a long if you didn't check any other time frame here. So let's just switch this over to a 15-minute chart and see what that looks like. So now we're on the 15-minute chart, a bit zoomed out, and take a look at this. We're clearly in a downtrend, and we've been downtrending for a while here. Price is moving downwards over time here, and it just keeps moving downwards. We get these spikes upwards, but then new price comes in and puts in another low every single time. So had you only looked at that 5-minute time frame, you'd be looking for a long here. However, on the 15-minute time frame, we're clearly trending downwards, and you should be looking for a short. So when you're looking for a trade, I'd recommend using at least 2 different time frames to confirm your trade. The 15-minute here is telling you to short this, and the 5-minute time frame here is telling you to long this. So when you have conflicting views like that, you typically don't want to take a trade. You don't have any confidence in it. So now that you know to use 2 or 3 different time frames, how do you know exactly which ones? Well, this depends on the type of trade you want to do and how long you want to be in that trade. Let's say you're looking at the 1-minute chart, for example, and looking for a trade. Let's say, to keep it simple, as soon as we break this high up here, you want to buy into it, expecting the price to continue even higher up afterwards. This is known as trading a breakout, and it's a pretty common strategy. Okay, so let's look at some previous examples of breakouts on this 1-minute chart and see how long you actually should have been holding these trades. Let's say you were looking at the price in here, we saw it come up to here, have a little pullback, and now you're looking for the break of this high as your breakout strategy. You might have entered a trade in here and been faked out, but let's just assume you skipped this one, you didn't get enough confidence, and you entered into this trade right here. As soon as we broke out with this massive green candle, you entered in here. Now your trade would have been successful, but the time and distance of the trade is super important and relative to the time frame here. So if you can see, this breakout happened around 13:17 on August 29th, and the very top of our move happened only a few minutes later at 13:30. In other words, this would have been best suited as about a 10-minute trade. And the other thing to note is that this trade only moved about 0.1% total. So how long you're in a trade and the amount you're looking for on that trade is directly correlated to the time frame you're using. If you're on a 1-minute chart, you better not be using a breakout or any other sort of strategy to try and hold this trade for a few hours or a few days. Depending on your strategy, you're going to get a feel for exactly which time frame you want to use and how long you're expected to hold that trade for, but this is just one good example. About 10 candles worth of time would have been ideal on this 1-minute chart. So let's look at just one more example of that. Let's say the price came down all the way to here, started to move back upwards, you saw this high get put in, have a pullback, and now we're looking for a breakout of this new high again. You see this nice green candle that pushes above it and closes above it around 8 o'clock on August 5th, and let's take a look when we would have peaked in this trade sometime at the end of August 6th. So on the 1-hour time frame here, this is almost a 2-day long trade. Now you could have definitely exited this a bit sooner, so maybe from this 8 o'clock breakout, you saw us move upwards and start to come back downwards afterwards here, and you would have maybe exited in here, which would have been somewhere around a 10-hour trade, similar to how a 1-minute candle produced a 10-minute trade. Just to reiterate, you're going to have to practice this a bit and kind of look at charts in the past and see just how long you want to be trading. But one thing I can say for sure is that you should use multiple time frames, and that the time frame you're trading on is completely correlated to how long you're holding the trade and how much price movement you're looking for in the trade. Thank you all so much for watching, and again, thank you all so much for your support. I hope you enjoy this content, and if you do, please like the video and let me know in the comments below. And if you want to see similar content to this one in the future, hit that subscribe button. It should only take you a couple seconds, and I really appreciate the support.